where do you go from here? You said you're introducing an RA, you've got discretionary. I would imagine you start integrating more broadly in the ecosystem, chatting to the JSE. I know with Valdine Reddy coming in as new CEO, the outgoing CEO, Leila Fourie, always wanted to try and tap into that. I mean, when she was in Australia, she said Australian investors love to have a go, as she called it. And she wanted to tap into that because we saw it with the crypto space, for example, and get younger retail investors more engaged with the JSE. Surely this is a great way to do that.
Honestly, our vision and our mission for the company is less about building a trading platform. I think a platform like Easy Equities has been doing that for a long time. Our goal when we started was helping people feel confident about how they're managing their money. So it's more holistic than that. It's at the end of the day, and I think you alluded to it just now, talking about these actively managed ETFs, and then you've got things like discretionary fund managers and so on. I think the role of the financial advisor has changed over the years, and I think it's easier now to break that whole domain up into three pieces and say, well, I've got an advisor / planner, someone who looks at my life holistically and decides, what I should be doing with my money. Have I got all my risks covered? So risk products are important. You as soon as you've got dependents, you should have life cover. You should have, income cover and so on, disability. And their job should be to get paid for their expertise to help you get that right. Then separately, you have insurance brokers who do a different job, and you have investment managers who do a different job. And I think if we get to a place where those things are very distinct and well understood by the end user, we've sort of achieved what we're trying to achieve. So it's a.
So you want to be the layer in between, helping the end user access.
Here's
those
the tool.
three.
Exactly. Yep. And I can see us evolving into towards the advice space. Obviously, technology is going to change all of that over the next few years. I think it's naive. The advisors we talk to, and we follow the industry very closely. It's the hottest topic, of course, is AI. Is how is that going to influence the advice industry? And I think it's absolutely, technology is going to come in, and what it's going to do is it's just going to further entrench, I think, this role of the financial advisor as your human connection person who's there, when you need a pat on the back, or you need a, reassurance when the markets go down, those kind of things. It's going to be about relationships. And so I think it's even more likely for me that advisors who live on this model of just racking up as many clients as I can and building up a book and living off that commission and annuity, they're going to struggle because they are very easily replaced by technology. It's the good advisors who aren't. So I see us evolving in that direction and providing more sort of intelligence and little nudges. These days with things being much more real time and digital, it's possible, for example, for us to say, oh, we've noticed you've got some idle cash sitting in this account. If you just move it over here, you can earn a slightly better yield, and those kinds of little things.
And where this heads, because your model is much more scalable at a kind of mass market level, surely you're looking to grow beyond South Africa once you crack the South African nut.
There's a lot of work to do in South Africa. I think this market is bigger than people think, especially in the, where we're focused in sort of the middle to upper income brackets where people, I think our ideal customer is someone who's, got a university degree and is earning a decent income and has money to save. The reality is, a lot of people in South Africa don't even have a cent to save.
Yeah. Well, we saw that with Two-Pot and the withdrawals recently.
That is a complete another whole problem, which I think we're not going to solve today. But I think that market is bigger than people realize, and there's a global trend of wealth transfer that's going on, and I think we'll see it in South Africa as well, where there's a boomer generation who lived through the boom years and made lots of money and sitting on significant wealth are going to be passing on that wealth to the next generation. And I think for a lot of advisors, they're going to be looking at that going, well, how do I make sure my clients' kids still want to use me as an advisor? Because I think a lot of them are going, well, no, that's not my style. I'm on an app, or I'm doing it differently. So I think there's a lot of macro trends that will drive this as well, and I think lots to do in South Africa before we go anywhere else. We've followed a lot of what we've seen happening in more developed markets. So we've seen incredible success of products in the US, the UK, Europe, in this vein. And some of them have taken directions of going wider. Some have gone deeper. There's a fantastic company in Canada called Wealthsimple who have basically become a bank. So they started with savings and investment management. They built up an incredible customer base who trust them because they took a similar approach of just offering value and being transparent. And very quickly, they were able to just switch on banking, transactional banking, and all of their customers flocked in. So I think there's lots of opportunities to broaden the product offering before even looking outside South Africa.
Adrian Hope-Bailey, thank you very much. Very exciting time, I think, ultimately for the saver, for the end user, and I think that in an industry that has really, I think, been quite slow to adopt and change, is a very exciting opportunity for the likes of Fynbos Money. Thanks so much for sharing a little bit more into your philosophy and your insights with us here on Business Talk.